And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. We certainly had a very interesting close for the week after a rather myopic 2-week period. So lots to cover. And I am going to go ahead and get started by sharing with you our agenda. Here's what we are going to be reviewing today. Of course, as usual, we want to make sure that the broader markets are in a place where we feel comfortable putting new money to work. From there, we are going to take a look at leadership in the current markets, where that is, and how you can participate in that. Also, all about earnings season. We did have a super big week this week, and I'm going to share with you some ways to kind of get in front of names both before and after they report their earnings. Stocks of interest at a new high in price. We are in a period where there are a number of stocks hitting new highs, of course, as the broader indices do as well. So we'll take a look at some of those stocks that are at new highs, but look poised to trade even higher. As usual, on Friday afternoons, I like to take a look at some of the more significant headline news that took place last week. And this is all about preparing yourself for next week and beyond, and then also helping you get your arms around some of the action, the activity that did take place last week, again, with an eye toward future potentials. First up, we did see oil prices. They were flirting with that $70 per barrel level. This is an area that I have been covering and talking about since last fall, when oil was still under 50, and it's just been really, they've come and roared back to life here recently. We did see factory orders surge amid what we are seeing, no doubt, is an economic recovery. We also, on Wednesday, the private sector jobs did increase. That was an ADP report. It was the biggest increase since last September. However, unemployment claims weekly yesterday, actually, this was a good number as well. They did come in below 500,000 for the first time since the beginning of that pandemic. So we did have two very positive employment reports. However, today was a bit, I would say, of an anomaly, because we did get employment numbers for April, and the gains, only 266,000 jobs were added. Analysts and experts were calling for 1 million new jobs, although I will say the markets by and large did shrug this off. Unemployment rate also rose. It went from 6% to 6.1%. So a little bit confusing, but again, we are always about how the markets perceive those numbers, and by and large, they did appear to shrug those numbers off, given the strength that we are seeing elsewhere in the markets. So here we are. Let's get started taking a look at the S&P 500. This is a daily price chart, and I'm pointing out to you that today's action did in fact push the S&P 500 to a new high in price. Now, this is that period I was mentioning before. We were going into a third week of just sideways. I did, in fact, my MEM Edge report subscribers will know that when we got into this overbought position with the RSI and the stochastics, most individuals were talking about the potential for a sharp pullback. From my work, I made it clear that it's very equally possible that we would just get this back and fill period, which in fact we did do. And now we are breaking out of this lengthy base. Nice volume characteristics today. And throughout this period, the S&P was still in an uptrend. This spark here to new highs only confirms that just a bit further, actually. So as usual, from here, we can go ahead and take a look beyond the broader markets, as I like to say, pull the curtain back, and let's just examine where that relative outperformance where the strength is within the S&P 500. So here we're listing and looking at the 11 underlying sectors. I've gone ahead and added that relative strength indicator, and we're sorting it descending. So your strength is up here in the upper left quartile. So go ahead and update it here. And let's take a look. We can see basic material stocks very much large and in charge. Let's go ahead and blow this up. And you'll see it's been in a very nice uptrend here. Basic materials, this is all about global recovery. So we're going to dig down further beyond this, take a look at which materials areas are outperforming. Actually, most of them are, but more importantly, how you can really participate in that. Financial stocks, we did see banks up very strongly today. The S&P up about 1.3% for the week. Bank stocks, however, were up 3.5%. So very much outperforming the broader markets. We can see these banks, or in particular financials, we'll get into the banks later, but in a very nice uptrend. And this is very typical when we are in a recovery phase. We'll talk more about that as we move on. Industrials are another area that are all about outperforming. These cyclicals do well when we are in a phase of an economic recovery. This is XLI, that industrial ETF. Take a look at these volume characteristics over the last 2 days. Really woke up, if you will. Lots of names certainly within my MEM Edge report, in financials, in industrials, and also energy. This is a big, heavily favored area that I also talk about in my report, and also have identified stocks really poised to participate. So let's take a look at XLE. This is the energy, most oil. There is renewable energy, but it is primarily oil related. So we can go back to this November. This is that pop on the news that a vaccine had been discovered. So energy had a very, very tough period. Let's go ahead and take a look at a weekly chart here, and you can see how they just fell out of bed during this bear market period, and then even beyond. And this was just that quarantine lockdown, not just in the US, but globally, and oil consumption just plummeted. So beyond that, when we were coming into this period post vaccine, there were other dynamics at play here. Again, my report was all talking about that, where OPEC, the internationally oil producers, get together and they talk about production levels, and they did get together and decide, these oil producing countries, to reduce production. And that was huge. That was back here. We started to see oil prices raise. Once they get up above $50, we're going to take a look at oil prices next. That is the break-even point for energy companies to begin to then possibly make profits. So we did get this nice move out of here, but it really was huge. At one point, year to date, up here in March, energy stocks were up 42%. So we certainly, there was an anticipation that we would at the very least see a pullback. We did just that. The point here is that energy is just now breaking out of this base. So for those that feel you may have missed it, I would urge you to think otherwise. They're all coming out with earnings reports. Energy oil is now at $70 per barrel, and there is anticipation that it's going to go at least 10, maybe 15% higher on energy prices, oil prices from here. So that's a look at energy. Then from there, what is equally important is to really have a sense of those areas that currently are underperforming. You want to make sure that you don't have an overweight in that particular area. We're looking at XLK. This is technology. Now, tech had a nice bounce today. It did hit a new high, certainly going into May, but we did see this sell-off, and this is all about fears, inflation fears, because some of these areas, these stocks, high growth, are going to be hit the hardest as far as the value of the dollar being less in inflationary periods going forward. So very important that you at least are aware of that. So let's go ahead and take a minute here and drill down even further beyond those sector ETFs. And from here, I've populated not only each of the broader market indices, but also sub-industry groupings. And for my work, I like to look at these high growth semiconductors, software, biotechs. Also, we're going to take a look at gold, the price of oil, and so forth. And again, adding this RSI descending, I'm going to go ahead and make sure we have the latest data for that and take a look. The Dow Jones Industrial Average is up here in the forefront, and the Dow did hit a new high prior to the S&P. And again, a lot of, it's not as heavily industrial weighted as in past, but certainly some of your heavier weight names in the Dow are going to be all about the recovery play. So we're going to drill down to those 30 stocks and really get a sense of the better names beneath the Dow that you'll at the very least want to be aware of, but more importantly, utilize those stocks as a way to take advantage of this really pronounced move into these industrials, materials, and so forth. And just thought I'd pop in. I usually do not take a look at gold, but it did warrant a look, certainly given the rally this week. We can see that it is in a confirmed uptrend. From my work, I would want to see the gold spider, GLD, break back above this blue line. That's your 200-day simple moving average. That would give me even more conviction that gold stocks have higher to go. And then beyond that, I did mention to you bank stocks. KRE is an ETF for regional banks. We can see they're just in this very nice uptrend, a number of bank stocks reporting very stellar numbers. And we can see KRE just recently breaking out of this base with your outside momentum indicators very positive. So lots of relative strength there, and they do appear to have further upside. Let's take a quick look here at crude oil. It did hit $70 this week. That was a real critical number before pulling back ever so slightly. But we can see, again, the price of oil is in an uptrend. For those of you that are not subscribers, I urge you to go ahead and take a 4-week trial of my MEM Edge report. I'm going to talk about the dynamics among and why oil is not only currently at nice levels, but why the anticipation going forward. There are about 3 different real dynamics at play here that could easily propel oil and then energy stocks quite a bit higher. Let's take a look at the small cap area because it has been underperforming of late, but we did get a nice rally today, 1.3%. So we're going to be on the lookout for a continuation, of course, out of this small cap is another area that tends to do well when we're in a period of economic recovery. However, this huge advance here is still continuing to be digested. I'll share with you, hopefully we'll have time, where you can uncover some of the better candidates in small caps should we see a more pronounced move into an uptrend. And from here, we can just go ahead and take a look at some other areas that bear a closer examination. This is semiconductor stocks, a big component in tech. And you did see that tech has been underperforming. This semiconductor index has as well. But we did get a nice late week rally this week, and not all stocks participated, but certainly it is potentially building the groundwork or the stage for a downtrend reversal. Once these semiconductor stocks get going, you can really experience some explosive moves. So I'm going to be all over that and continuing to keep a close eye on that as well. I'm going to take a brief break here. When we get back, lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. This screen that I'm sharing with you currently is just a really close look at the Dow Jones Industrial Average, the stocks within that index. And quite simply, it's sorted by the percent weight that that stock has within the index. So it's certainly worth noting when you see an index hitting new highs, which are those stocks that could potentially be mostly impactful within. So here we are with those stocks in the Dow. I'm going to shoot over here to StockCharts.com. They have a wonderful way for you to really import any index, Dow, the S&P 500 and on, by simply going to your chart list and then new list, and then they will provide you with that possibility to go ahead and add a particular index. From here, I do have the Dow components. And again, I like to do that RSI. These are 2-month candle glance charts, but again, I want to see which names in this particular case within the Dow that are really outperforming, certainly performing better than their peers. And then also this type of glance and view can really, from my experience, give you a sense of stocks that are poised to trade higher in the current environment. So let's go ahead and take a look up here because there are 3 stocks in particular that I want to draw your attention to. There certainly are more. We really could go through each and every one of these and you'll see this is United Healthcare. They did come out with earnings here and they were propelled into a nice uptrend. But technically speaking, this is Goldman Sachs. One of the names certainly with my MEM Edge report that we highlighted as a winner prior to this uptrend, but it did break out of this nice base, nice volume characteristics. So that is definitely one worth keeping on your radar. Let's take a look at JPM because it is posting a bullish pattern here with today's candlestick. So it is worth noting. Another large money center bank. And what we are looking at here with JPM today is the stock's price at one point traded below yesterday's low, and it actually closed above yesterday's high. And this particular pattern is called a bullish engulfing pattern. Now, when you see these types of patterns, there's no one that would tell you that they are 100% predictive, but it certainly is something worth noting, similar to other patterns. But we can also see that these dynamics here with this black line up through the red, with your MACD momentum, just getting started with the stock breaking out of a nice 5-6 week base. So let's go ahead and move back here so that we can examine. We can see Caterpillar, another potential bullish engulfing pattern, but more importantly, it did pull back very orderly to this 21-day simple moving average before closing at a new high. Take a look at this thing of beauty with the black line just now coming up through the red with that bullish MACD. So I did want to go ahead and share with you another stock, certainly that was up quite a bit today, that bears a closer look. And I am trying to see if I can uncover Nike had what appeared to be, here we are. Okay, so we can take a look at Nike. Now, I will tell you it's not my favorite chart because when I'm looking at stocks, I like to see stocks that have had a very nice uptrend, orderly pullback, and then enter into a new uptrend. Instead, with Nike, what we have is a lot of head fakes, a lot of false starts, and then a downward trending phase as these simple moving averages trend downward. So simply pointing out to you that we did get a bullish break back above this 50-day simple moving average. However, given this recent choppiness, Nike is going to have more work to do than your standard pullback reversal. So, but did want to point that out. It's up about 3% today, and that's pretty good for such a large cap name. One last name that we can take a real close look at here is Cisco. We can see the stock had been drifting, and this is what a lot of these stocks generally had been doing. But over the last 2 days, nice downtrend reversal, big volume characteristics, and we're just now poised to get that downtrend reversal signal. So that's a look I did want to share with you, certainly as far as leadership, the Dow, and then within the Dow. From here, I do want to go ahead and talk more about earnings and some screens. We're getting deep into earnings season. So as you may recall, about 2 or 3 weeks ago, I was sharing a screen with you, a preset screen here, where you can ask and for any stocks that have had upgrades going into earnings. Actually, it was longer ago than that, because oftentimes as analysts are upgrading going into earnings, oftentimes it is a precursor to bullish earnings reports. So now that analysts have, earnings season, a lot of these companies have already report it. So this is another phenom that will occur during earnings season where actually the analysts are revising their estimates higher after the report. So let's go ahead. I do like to use StockCharts.com for my charting. So I'm going to go ahead over here and just share with you on, let me just share with you again. This particular list here is before the open today. These particular companies, let's see how many we had. 37 companies had their earnings estimates revised upward before the open. And a lot of these companies did already report. Analysts then dug in and they are raising the estimates following strong earnings. So from here, we're going to go ahead and take a look at some of those stocks. First up is ALB, Albemarle. This is a chemical company. And again, this is the type of pattern that I am going to be on the prowl for, simply because from this November period up to its peak in price at the beginning of February, the stock almost, in fact, it did double. So that's 100% price improvement. You will anticipate a pullback, and we are, in fact, and did get that very orderly saucer type formation. So from here, I'm going to keep an eye out on the stock, because what I want to see is the stock's price break back above this shorter term 10-day simple moving average at about 165. And that could be a continuation of the formation of the right side of the base. The company came out with strong numbers and analysts are now upgrading it. Let's take a look at a couple of other examples of analyst upgrades before the open today. And again, these are companies that have already reported, so you don't have that risk. And this is Belden, BDC. I'm going to go ahead and pull up a full quote here so that we can get a better feel. It is a telecommunications company. It's listed here as electrical components. But more importantly, we want to take a look. The company reported strong earnings, gapped up on the news. And then subsequent to that, we saw another gap up today, huge volume characteristics here. So when you see stocks gapping up in response to strong earnings, the best case scenario is that the stock continues to advance as opposed to pulling back and filling this gap. You're also seeing a continuation on volume. And then your momentum indicator with your MACD just now getting into positive territory. A couple of other names that we can take a look at, and then I'm going to share names where analysts upgrade it. But you're going to want to keep the know how to read the chart to know whether that upgrade has any validity. This is ConocoPhillips, COP, one of the bigger major energy companies, came out with their earnings, and then analysts subsequently upgraded their outlook for the stock. Your outside momentum indicators are positive, and the stock is in the throes of forming the right side of a base. They did come out 53% year-over-year earnings, and it was about 28% above estimates. So from here, I'm going to share with you two stocks that also were upgraded following their earnings. However, they are not ready for prime time. This is Etsy, ETSY. They are a software platform for creators that want to sell their wares. And what we can see is the stock has not been participating in the broader markets here. And they came out with numbers gapped down on big volume. So from my many years, those of you may know that I've been following the markets, stocks for well over 20 years, viewing thousands of charts, worked with institutions and so forth. Whenever you see a gap down on volume relating to earnings and then a break below key support, that is not a stock that you want to touch. And particularly given all the other names that we've looked at that look so much more constructive. So we did see a 5% rally on today's upgrade, but here's our first barrier of upside resistance. This 200-day simple moving average. And even if we do advance above that, this general downtrend, it's going to take quite a bit of work for Etsy to reverse. Another company that was upgraded following the release of their earnings that I would not go near is Datadog, a very, very ugly chart. This particular company had been a big winner out of this bear market, but it did peak in price. Let's just take a look at the chart. It's just not very pretty. We can see it did have a nice 8% rally on this analyst upgrade, but it is just down for the count. So many other names. So if we had a minute or two here, I did want to share with you other areas that are perking up that I feel you should be aware of so that you can potentially participate, because, and really what it's going to do is confirm this move and this recovery, global recovery play. We're looking at EWZ. It is the Brazilian ETF. Take a look. Now, many of you may know Brazil has gotten particularly hard hit with COVID of late, but we can see a huge gaps up and rally as analysts, as investors are anticipating a global recovery. So that is Brazil. Let's take a look at India, INDA, another very hard hit area, but we can see that the broader markets are fully anticipating India, Brazil, and we're also going to take a look at Russia, but there are these companies, these emerging countries. This is Russia, ERUS ETF, breaking out to new highs. And these particular companies, if you go into these ETFs, a lot of them are going to be oil related. They're copper, mining, a lot of basic materials. So that is something I certainly did want to share with you. We can take a look at copper is hitting a new high. So we can take a look at Southern Copper, SCCO. There's an anticipation due to demand and supply constraint, high demand and supply constraints. There's anticipation that copper is going to hit a new high. So again, go ahead and use that link below. Take a 4-week trial of my MEM Edge report at a nominal fee. We'll get in front of all these exciting moves that are taking place in the market and point you towards stocks that will allow you to participate. Have a great weekend, everyone. All you mothers out there, happy Mother's Day, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.